Broadcast is now starting. All attendees are in listen-only mode.
Hello, Face. How are my trading warrior brothers and sisters doing today? Let's have a great week. Everyone doing okay? How you, Dan? So, traders, lots of red events this week. 3 central banks, Fed, ECB, BOJ. I think the pound's probably weaker on Brexit worries, and Brexit's going to be really in focus as well this week. We have the summit tomorrow, so I guarantee you the markets will be here after the dust settles, after all these events. Make sure your equity is. I have a few ideas, mainly thinking about keeping my powder dry until at least after the Fed. So hold on a second. Anne, honey, will you please take my mouse and lock it up in the safe, in the wall safe? Okay, thank you very much. Yes, I'll I'll ask you for it back after the Fed. Will you be around Wednesday around 11? Okay. All right, I'm safe now, everybody. I have no self-control. Whoops. Impulse trading 101. Anyway, a few of my ideas is into the Fed. This was a good catch last week. 1020 was a number. Could we fail from here? Yes, and I could miss it and everything, but I'm thinking there might be a chance if yields head up and risk stays favorable into the Fed, which you never know. I mean, we're getting so many divergences on the S&Ps on multiple time frames now that perhaps US dollar yen could make one more move up towards that 50 level. Where was the yen? Yeah, 40.50. So perhaps up here where I have some confluence, it would still be beneath the high here. And so that would coincide with 10-year yields. I had a pretty negative day at 61.8 last week. It might play up here. I'm thinking this too into the Fed, which they're Siamese twins right now, US dollar, yen, and yields. Okay, even more so than the correlation being strong with gold, because gold didn't rally much last week with the yen coming off later in the week. So still strongly neutral gold. I can't short it. I can't buy it here. Something that I am seeing here in silver, and we've been more positive here. I don't know how many times I've asked about silver gold ratios with anybody who covers precious metals. Have another trader today, Robert at CEO Technician, who specializes in gold and oil. So we'll be able to talk about this. But here in the silver, you have a couple of drives here and a non-confirmation. So we'll see. Maybe it ends up being a 3-drive formation into the Fed. And there was just one other thing I want to show you. And haven't been proven wrong. The bears haven't been proven wrong. The bulls haven't been proven right. But I keep looking at this EG chart here, and it just won't die. I mean, this 86.20 level held again last week. Looks to me like if we could close over 40 here, it's going to measure 90.80. This would imply on a breakout here that the euro's your preferred long. So, you have 220. We'll give you 90.60 up here. And I keep looking at this formation. If we could break out over here, people that know my work, know that I still think this pattern is incomplete. And I'm thinking it's also possible that it's not about dollar weakness. It might be about cable weakness for this to work. It may not be about a big bull move in the euro as much as, maybe we're finally going to get some type of real capitulation move in cable that's going to make the spread work. So, we're getting pretty close to the line in the sand here too in EG. If you just define this this. So it looks like 88.40 on a closing basis would be okay. Yeah, it's been a chop fest. But do you understand why I think there's a possibility and no one's really bullish this pair? Most people, like you last week, had a successful scalp to the downside, Dan. Most people are looking for a resolution to the downside. So, I think they got all the buy sell stops when they did this, right? I mean, held, false breakdown, back in it. So there's plenty of stops for them to go for here, 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 and the grand prize here. So just something else for you to put on your radar screen. I think that's about all I have. Looking forward to my interview. His nickname is Goldfinger. So, if we have any odd jobs in the house or 007s. Interesting weekend. As far as what? Me laid on the couch? Oh, G7. Oh, yeah. Well, it's a new paradigm. We'll see what happens. We'll see. A lot of people are cheering the teardown of the old order that's worked since World War II. So, it's breaking down anyway. Maybe it's better to get it over with, right? So anyway, those are some of my looks. I'm really, you can trade, but think about this. If you're trading this week, just get out before the release of the numbers, the announcements, but be aware that a lot of these moves don't happen on the Fed announcement. I believe they have a press conference. The ECB usually has a press conference. So the volatility just is not on the announcement. You really have to wait and see what the reaction is to the press conferences. Is it a deal that the markets will be here after all of these big events and we're going to take care of our money? If you had a banner week last week, one last thing, let me coach you. When you have windfall profits, sometimes, or when I'd get sloppy, and in my head I would hear this rationalization: oh, it's just a house money. I'm giving a little back of the house's money. Well, delete it. It's your money. Okay, it's not the house's money. It's now your money, and protect it like it's your own. If you have to pull money out of your account and go spend cash to know what that feels like again, it may give you a different perspective on what you're accomplishing trading. Okay, so looking forward to Blake's probably pretty waterlogged from spending, I don't know, probably 40 hours in his pool this weekend. It's the way I lived in Arizona, and you go from the pool into the air-conditioned house after you dry off and grab a beer and grab a cold beer. Did you do that once this weekend?
Actually, I did not. I'm kind of laying off the beer after being in San Diego last week.
Blake's drying out.
Yeah, but I did wander my way into the pool a couple of times.
Yeah. I'm curious. What's the pool temperature right now this time?
It's nice. It's probably like 80.
Nice.
It's the water's gorgeous right
Warmer than the ocean out here, huh, bro?
Oh God, yeah. Oh God, yeah. My toes were frozen by the time I got out of the motion there.
So the markets are, you know, I'm kind of, you know, you're a little more aggressive than me. I feel kind of frozen with all of this stuff happening. Is the ECB on Thursday?
It is.
Okay, so I mean, all week long there's cannon fire.
There is. I do disagree with you just a little bit regarding the Fed. Everybody's expecting a rate hike, but the dot plots are going to matter. So
Right.
when the statement comes out, you know, we should have a good idea at that point in time how the dot plot looks, which might give us a little bit of a jolt at the statement. So
rates, stub or statement afterwards.
Yeah, and
Okay.
and you know, and especially if the dot plots are changed at all, you know, that might influence the market a little bit more. But the ECB, yeah, the press conference is going to be big because you know, the questions are going to be, did the ECB talk about a potential exit or reversal of purchases? So that could be a big mover alongside the Fed as well. I think both of them are going to be big events.
You know, there's talk, Blake, about that the ECB is going to do that, not necessarily because, you know, their economies are strong or inflation worries, but to send a political message to Italy that if you lose fiscal responsibility during this transition, QE is not going to bail you out.
You know, that's a you know, potential thought process. I think that, you know, Italy is a big part of the, you know, of the Eurozone, and but I think Italy also feels that the ECB this is not a one size fits all situation. I think Italy would be very happy if Germany wasn't in the Eurozone, because then the rest of Europe could really have a more harmonious monetary system.
That's the friction.
Germany is. I mean, and you know, Germany wants to stay in the Eurozone and won't leave the Eurozone because it's benefiting from a weaker currency. I mean, if Germany had to go back to the Deutschmark, I mean, Deutschmark would become a very strong currency, and it would kill Germany's economy. So Germany it doesn't want to leave, and it's like, no, you leave, you know.
Who's going to blink first?
Right. I mean, remember, Germany is really benefiting from being involved in the Eurozone. This is the biggest swoon for Germany, that, you know, world's second largest exporter, I guess. You know, I guess they're number 2 or number 3, but anyway,
looks like Euro's coiling on your chart, buddy.
It is
the moving average and the trend line.
Yeah, I really think that this, whether we, you know, get below 117.30 or get above 118.30. I'm sorry, I'm tired. I've been yawning all morning. When I got up this morning, I actually was drooling on my arm as I got up off the, you know, when my alarm went off. I was so tired. It's tough, you know. I always try to explain to people, and I don't know if you're the same way, Dale. Being located where we're at, doing what we do, is that's why that you don't meet a lot of people in the currency market on the West Coast. And the reason why is because you have to get up at 3 o'clock in the morning to stay relevant, to be involved in the markets. And so when Saturday, Sunday comes around, it takes, you know, I don't, you know, my alarm goes off, or it doesn't alarm, or it doesn't sound, and I sleep in an extra hour on Saturday, and then an extra hour and a half on Sunday. And then by the time Monday rolls around, you know, like this morning, it's hard to get back up again. And, you know, it's that cycle over and over and over again. You never, you know, nothing's ever really consistent. I guess I can consistently get up at 3 o'clock in the morning on Saturday and Sunday, but that would suck, you know. That would ruin my weekends completely. So yeah, it's always tough. That's why Mondays are significantly more difficult for me than the rest of the week, from a waking up standpoint. So
Oh, you trade through all these events, don't you, Blake?
I do. Like tonight, for example. Although I don't have really high hopes of this Trump, Kim Jong-un meaning I don't think there's going to be any major breakthroughs. I don't think that, you know, we're gonna walk away from this week together and go, oh, there's a big harmonious, you know, unicorn and rainbow party, and you know everybody's gonna celebrate a big, you know, world peace, you know, summit and denuclearization. You know, I really don't think that's.
I think he knows what he's going to get, or he wouldn't have gone. And it'll be packaged. You know, they're not going to get rid of their missiles in the next week or two, but they could sign a peace treaty between North and South Korea and the U.S. and you know, cosmetic things like that. But I don't think he would have made the trip if he didn't have something in the bag. Don't you?
No, because I think it's so historic. I think it's, you know, knowing that no other U.S. sitting president has met with the North Korean regime. It's an accomplishment in itself. So
yeah, you know what? You're right. I've read things that they're comparing this to Nixon's visit to China, and when Nixon went to China, China pivoted to the U.S. and away from Russia, and China is worried about North Korea pivoting away from them with this. So anyway, it's interesting times, huh?
It's going to be interesting, and like I said, I'm not expecting a whole lot, but the fact of the matter is like you asked about, like, I trade all these events. I do trade all of these, you know, monetary events, most, as long as I can be awake for them. Actually, what I end up missing a lot is you know, economic data out of the UK is what I end up missing the most, and Eurozone as well. But like tonight, I'll be up late. I'll be up late because the meeting is at 9 p.m. Eastern, and I would assume they meet for at least 3 hours. That would be my best guesstimate. So I'll be up till at least midnight Eastern tonight, waiting for, you know, some sort of headlines, and then if that doesn't happen, then I'll eventually go to bed, you know, maybe around 1 o'clock Eastern. But then, you know, and still get up normal times. But just keep in mind, tonight at 9 p.m. Eastern is when the meeting starts, and I would think that a few hours later we should get some sort of initial comments. But I mean, I can't imagine this is going to be a working meeting of 10 hours in behind closed doors. You know,
they're saying it's a getting to know you meeting.
Yeah,
getting to know you, getting to know all about you, you chubby guy.
Well, so with that being said, I'm wondering, you know, if the dollar yen, because this is really your guide right here to risk appetite, risk aversion. You know, by the time tonight rolls around, and you can see the dollar yen's poking its head into this downtrend line, this resistance, we're probably going to be tonight doing something like this, or doing something like that. Well, actually, you know, let me take that back. Today, I would assume that we kind of reset back to mid-range, so around here. And by the way, I am short the dollar yen at 109.70. I shorted it last night with stops, you know, above here. But it already is, you know, testing this downtrend line. I assume we're going to be like kind of mid-range, but you know, whether we go down like this or go up like this is probably going to be more of a result of what happens late tonight. That would be my assumption. I had a poor entry on the dollar yen. I honestly didn't think the dollar yen was going to push up to 110 by the time that I got up. You know, because I thought the trade rhetoric with you know they're calling this not the G7, the G6 plus one, meaning the United States is the plus one. So that's what they're calling this meeting. I thought because of such the contentious meeting that it was, I thought risk appetite would actually be a lot lower today. You know, I mean, look, you know, the S&Ps are down 2 points right now. 2 points. You know, they opened up down 7. I thought we were going to be down 10, 15. You know, after basically the fallout of the G7, and you know, risk appetite has really improved back to normal, and I'm sitting here going, why? I don't understand why, but that it is what it is, and but I do think that the dollar yen is going to reset in risk somewhat, where we, you know, head back down towards here, and then you know, we're going to figure out if we're going to do this or this, you know, and I think that's going to be more because of what happens with the North Korean summit, and this is all obviously ahead of the ECB and the Fed later this week, which is, I think, going to be where the volatility comes into the euro dollar. If you're really focused on the euro dollar, this trading range here is probably going to be violated as of, you know, Wednesday, Thursday versus what's happening here in the next couple of days with North Korea. So anyway, you know, that's kind of what I'm looking at with the euro dollar. I'm not doing anything with the euro at this point. I am still constructive, and I think it still looks bullish. Like I said on the week ahead video, I think that the risks are that the Fed is, you know, fairly neutral, if not, you know, a little bit more dovish, and then you have a more hawkish ECB, which then would break the euro out to the upside. But I'm waiting for Wednesday, Thursday to deal with the euro. I'm not dealing with the euro at this point in time. The pound also is trading a little bit heavy. It's trading back towards this upward sloping trend line. I'm not long the pound, even though I have a bullish pattern in play, still working for the cable. I've been playing it to the long side the last week, and I bought it twice, sold it twice, made money both times actually. I was gonna buy it this morning, but I've been looking at the dollar yen the whole time, so I kind of missed my what would have been my entry a little earlier down here at 135, you know, 133.50, 60. I kind of missed it, and it's already, you know, it's already kind of lifting, and I'm not sure if I really want to play it at this point, because the pound and the euro are kind of benign, and I think if the cable gets back up towards 134, 134.20, it's more of, you know, kind of a neutral stance at this point. The Aussie has had a little bit of a bounce with risk, not too much. It's really staying quiet. The Aussie and the Kiwi are both very, very quiet. The US dollar Canadian, let's talk about this, because and I think it's an important topic because of what happened over the weekend. You know, the U.S. administration did not sign off on the G7 communique, and that was obviously a level of contention for the market, but the market actually continued to rally. But the hardline stance that the Trump administration is taking towards Canada, and the comments that are being slung around against Trudeau, and what Trudeau's statement after, you know, Trump left for Singapore, that, you know, and the Trump administration view that is more of a backstabbing type of event. And you can hear it from there was an interesting interview with Larry Kudlow on CNN that I saw particularly because it came across my Twitter stream, and I watched this, like, it's like a 15-minute interview, and he really diced up you know, Trudeau, and then you know, Navarro's got the same tone, and that prompted my tweet yesterday saying that, you know, I don't think that this is going to basically make their relationship any better. It's just going to make the NAFTA negotiations that much more difficult, which is bearish for the Canadian. And And bottom line is, unless a NAFTA deal gets done, that's the only way I'm buying the Canadian dollar. Until then, you know, the Canadian seems very vulnerable at this point. And if you look at the dollar Canadian, we're approaching 130.50. We get a nice clean break above 130.50, and that's going to be a pretty bullish move for the dollar Canadian, I would think. Now you notice the peso has not reciprocated. The peso is up a little bit, but it's not. It's up slightly, but it's not, you know, following suit of the Canadian currency, which is a stark difference from what we saw last week, where people were thinking that, or 2 weeks ago before my vacation, people were thinking that the Canadian might fare better than the peso because of all the looming or outstanding issues on autos and trade in the NAFTA agreement. Now you can see the Canadians not being favored, and the peso's kind of slowed its ascent. So, but still, those are more NAFTA type of moves that should continue to determine the longer term trends of the U.S. dollar Mexican peso or the U.S. dollar Canadian. But the dollar Canadian is obviously a lot stronger today, based on, you know, the obvious contentious relationship between the U.S. and Canada at this point. And I'd have to imagine that all the mud that's being slung at you know, Justin Trudeau over the weekend, that's not going to sit well with the Canadian government either. Canada is going to probably be a little bit more like, hey, you can't push us around, so we're gonna it's just going to strain the whole thing. So I think that's, you know, obviously going to be bearish to Canadian, because the Bank of Canada has its hands tied, and it has to stay easy and dovish as long as there is no NAFTA agreement in place, you know, because they're obviously dealing with a potential housing crisis too in Canada as well. So anyway, I think that this is all very bearish the Canadian currency, or bullish the dollar Canadian, as long as there is no NAFTA deal, and as long as it looks like these relationships are going to stay strained between the two countries. But that's really what I'm looking at right now. Dollar yen, you know, is obviously poking up against key resistance. The euro yen has had a nice recovery back up towards its trend line as well. The other yen pairs are a little bit higher on risk appetite being stronger, or not as bad as everybody thought. So you can see it in the Aussie, the Aussie and the New Zealand yen, both a little bit stronger, because, you know, the S&P futures aren't down 20; they're only down 2, or now they're only down less than a point. So you know, that improvement in risk appetite is helping all these yen pairs higher at this point. And I'm going to leave precious metals to my colleague Steve, and Steve should be tuning in right now. Hey Steve, how are you?
Hey mate, good morning. Have a nice week.
Good morning. I had a very nice weekend. Pretty busy, running everybody around, and it's definitely warm here. So we call it warm. You people in any other part of the country would call it hot as hell. As hell's in the kitchen. For us, it's like kind of warm. Yeah. It only feels warm to me when I feel like I've got a blow dryer pointed directly into my face, 3 inches from my face. Then it's hot, and that usually hits us around July, August. So right now it's just hot.
At least the good thing is you have quite low humidity, so at least humidity isn't an issue, because the combination of the two is a killer, as you know.
Yeah, no, I have alligator skin, so it's great. It's great. So anyway, no, every you know, it was a good weekend. I hope you had a nice weekend as well. You know, obviously there's a lot happening this week. There's a lot for you to talk about. Now, I wanted to leave precious metals for you, because, you know, silver still looks pretty bullish. Now, gold's struggling at 1,300, but silver is, you know, holding up relatively well. And I've got to say,
I think silver is you know, is the one that looks somewhat better than the rest, but you know, it's still a slow, choppy process for the vast majority of the metals. I mean, you know, they've spent so much time consolidating, and I think we need more evidence to get enthusiastic about, you know, the potential, you know, breaking higher. If you remember, we had written a couple of articles about that, and I do still believe in the potential of breaking higher.
Hey,
But
Steve,
having said
I
that,
passed you over the screen. I don't know if you saw it come over.
sorry, mate, I didn't, but I just grabbed it. Thank you very much.
Okay. But yeah, you were saying about silver.
Yes. So I still see the potential of metals eventually breaking higher, but even if you see silver, it's in the middle of this long-term consolidation. It did, on a short-term basis, it did break out of like a descending trend line, and the daily close above 1670, is somewhat of an event, let's say, but I think that above 1730 is what would actually get the metal going, and if it does get going, I mean, if we zoom out, we can see that if it does get going after such a prolonged period of consolidation, we might end up having like a very large move at our hands.
And that's the same with if it actually turns lower and it breaks down. I mean,
yeah, absolutely.
Any break of this consolidation is going to be I would assume, a pretty big sustained breakout or breakdown.
Absolutely, so. I agree with you. Although you can call it a mental deficit, but at least I recognize it. Since my long-term bias on metals is higher, I'm absolutely certain that I'm going to be buying them if they break higher. But I will just stay sidelined in case they start breaking lower, because I would rather trade them in the direction of what I consider to be the longer-term trend. You know what I mean?
Yeah, of course. And I mean, I look at, if you can zoom out on like a weekly or a monthly chart of the
absolutely. Which one?
Of silver, the fact that the fact that we tested, or went up towards, 50 a long time ago, and I think that those levels that were hit, those levels will be at least touched or tested at some point, whether it's 5 years, 10 years, or 20 years from now. I think that I don't think that those levels that will be tested at some point. Not saying that it's going to be any time in the near future.
Even if we want to look a shorter term, Blake, just looking at this weekly, I think that if we do break higher from here, which is what, 1860 roughly, I do think that 26 is definitely an achievable target. I mean, this area 26 was a very strong area of support here, so why not acting as resistance? And keep in mind, that's from the 50 level that you mentioned, that's not even going to be a 38.2% retracement. So even if this proves to be, not a new move to, all-time highs or whatever, we can easily get up to that level, right?
Yeah, we could. And, if you were listening to the webinars that I was doing back in 2011, 2012, all of the guys that I knew that were long-term silver and gold precious metal bulls, I turned very bearish on gold when it was at 1700, and everybody that I knew that was major bulls of precious metals dumped everything up there, and but they've been quietly accumulating for the last couple of years, and not one of those people I knew, but somebody who is very much in line with those people are Stelios. Stelios has been, quietly accumulating silver and being very bullish here over the last couple of years, and I don't think he's off base. I don't, and I think that a move from 16 to 20 or 17 to 26 is very doable, and it's not like it's you think about a move like that and you go, well, that's only a couple of dollar move. That's only $7 or $8, but that's a 40 or 50% increase in value. I mean, it's a huge move.
Well, I think, guys, production cost is 18. So right now you're buying it under production costs. That's a pretty good deal.
Yeah. What's up, Stelios? Good morning.
Hey. I've been listening, and I agree with what you say. I just wanted to add that personally, you're right when you said I've been a bull for a couple of years. It's done nothing, which is frustrating, but I've been slowly accumulating. And what I do with precious metals is the following. I look at what I think are the main factors driving this, and you have supply and demand. So regular supply and demand. I'm not talking about flight to quality if there's a huge geopolitical issue or anything. Just supply and demand of gold and silver in terms of usage. that's been relatively constant. Okay, has its seasonality effects and all that, but it's quite constant. And then I look at the supply of money and credit, and I talk about this all the time, and that's just keeps going from 2008 onwards. It's gone parabolic. So as long as this continues, as long as the US generate a $1 trillion deficit a year, and all the major economies do as well, I see no reason why metals should not just keep going. It might take years, I agree, but in my opinion, they will keep going unless something significant changes. What is that? I have no idea. At the moment, there's no indication for me to change my opinion on this. So I do have it. I am accumulating slowly, and I'm armed with a lot of patience.
Yeah, what can really change? I mean, when you think about all the the debt to GDP ratios and how they've just really ballooned over the last several years. I mean, how is that going to change? How is that going to reverse course? And I don't know. I don't have the answers to that.
The thing, Blake, the only thing I can think of that can change things drastically is a big reset. But unfortunately, and I'm saying that knowingly that it's a very bad potential, and it has some chances. Big resets happen after big wars, right? And nobody wants us. Nobody wants, between us at least, to see something like that, right? We all have kids, etc. But unfortunately, really, other than a big reset, which usually comes through war, I can't see anything that will dramatically or drastically change the situation.
Well, the only thing I can think of, I know it's very, very far-fetched, but if you look at what's happening with the diamonds markets, I don't know if you read, there were a few days ago, I read an article about, I think it was De Beers, one of the biggest diamond producers, that they are now starting to manufacture them in labs, diamonds. So
yeah.
So that will change the diamond market probably. So if something extreme like that happens, and somehow they're able to manufacture
which means that potentially you have unlimited limited supply.
Yeah. So that's the only thing I can think of. But that's will that ever happen? I have no clue.
Oh well, for right now, we can see I look at your chart and I see a big consolidation, and if we break, it's going to be pretty massive. And I wouldn't want to be on the short side of silver if it breaks through.
And Blake, Stelios mentioned, actually Dale mentioned it now, but Stelios has mentioned it multiple times in the past. One of the reasons that fundamentally I would be looking to the upside is especially for silver is the fact that, okay, let's assume it's breaking lower. Okay, now at some point, only the fact that production cost is higher and demand hasn't been fluctuating much, I think that any breakdown lower shouldn't be long-lived, at least not years. You know what I mean?
Yeah.
So that's one of the reasons that I wouldn't be looking to actually sell in case we break lower, and I would only be looking to buy if we break higher.
All right, well, good food for thought, guys. Well, I'm going to let you get to the other currency pairs, some of these cross rates, because I think that's the majority of what everybody's listening in for. So good chat. You guys have a great trading session. Dale, have a great interview. And remember, if you guys haven't, if you're searching for a broker and you don't you had questions, or you have a broker that's really not meeting your needs, make sure you talk to Forest Park FX. They are our sponsor for the webinar. Steve will put a link into to how you contact them via Skype or email. They we partnered with them, and we haven't partnered with anybody up until Forest Park FX, and the reason why, we've been working with them for the last couple of years with their reimbursement programs, meaning that if you use one of their brokers and you're outside of the US and you use one of their brokers, you can actually get Forex Education free. And but they're there to help anybody. So even if you're in the US, because US has different rules than the rest of the world, if you're here in the US and you're like, well, I can't qualify for that, but I really need to find a broker, because the broker that I have.
If they're in the US, actually, Blake, I'm showing the screen as you speak. I've also put the link. If they're in the US, they are supposed to press the first link here. It says also sponsored listing US residents, and the rest of the links are for non-US residents. There is also here a Skype at the top of this page. There is a Skype link that you can directly communicate with them via voice, or even an email address if you want to use that.
Right, and one of the principles there, they actually man those themselves because they want to make sure that you're personally taken care of, and that I love that, and it's great. So make sure you contact them. Steve will leave you the link, and you guys have a great trading session, and good luck with the rest of the day.
Thank you, Blake.
Thank you, Blake.
See you guys.
See you, buddy. Hi,
By
Steve.
the way,
How you doing?
hi, Dale. I'm good, mate. I'm good. By
Good.
the way, to finish up what Blake was saying, Dale, Justin from Forest Park FX is going to be with us next Friday, if I'm not mistaken, right? Not
Yeah.
the upcoming one in 4 days, the one after that.
That's correct. A week from this Friday.
Okay, perfect. So let's go back to our charts. We already had a look at silver. Let's finish up very fast with the metals because we don't really have much to say about the metals, and then we can go to crosses and through your questions. As you can see, gold is also like consolidating between 1300. As we said, we need a break above the 200 DMA. It's somewhat lower than 1310 to actually start looking for more upside. On the other hand, platinum, that's also trying to break out from a potential descending wedge, but I'm not seeing like Friday's candle was a very nice candle. I mean, potentially a bullish one, but I would want to see some follow through. I would also want to see a move above roughly 915 to confirm, so I can establish a position. Palladium, on the other hand, here it is. Palladium, on the other hand, it's breaking above 1,000, but I really don't like the fact that there is no strong momentum so far. So I've still abstained from establishing some kind of a position in the metals. I'm still, of course, monitoring them very closely. What is without doubt, though, is what we've said about copper. Copper has broken out, even if it does move lower from here, as long as it will be holding above 318, I will be looking for it to extend even further to the upside. Okay, so that's it with metals. Now, by the way, whatever questions you want, you just type them in and we're going to have a look at them. I still remain long Euro USD from the day of the NFPs, from pre-NFPs actually. And, I feel very comfortable. I know that we have a lot of event risk coming this week. I mean, we from CPI to the central banks, etc., and all those potentially can move the euro, but I really feel quite fine holding it long. I'm already almost 100 pips in the money, and I'm probably going to be staying long even through the event risk, looking for higher prices in Euro USD, even if this ends up being a corrective move to the upside, which I consider it most likely that it's going to be and end up being a corrective move. I just don't believe that this move lower will probably end up correcting in so few days. I would want to see a bigger extension to the upside. So far, it's been following through to what we have, marked on the chart, and I feel fine about it. I also I'm also staying long S&P. You know something, Dale? You mentioned before when you were having this discussion. I just didn't want to interrupt. You were mentioning Trump meeting Kim Jong-un today, and Blake was holding like a smaller basket than you are. You said that you believe that they already have something agreed upon, and they will they will just release it after they meet. Otherwise, Trump wouldn't be going into such a meeting. You know something? I'm in 100% agreement with you. 100% agreement. I also believe that if there is a potential having to do with risk, for a move after whatever happens in today's meeting, it's probably something that can surprise positively and not something that can surprise negatively. I do not believe that they're going to be meeting, with an open book, an open agenda, and completely unknown of if there's going to be something agreed upon or whatever. I think that they have already more or less agreed to some guidelines, and they have a very good idea of what's going to happen, and that's why they're taking this meeting, because none of them, I mean Trump or Kim Jong-un, would want to go through a meeting that would end up proving to be a disappointment, because it wouldn't make them look good, and we know that both of them care a lot about what comes out, their image, and how good of negotiators they're going to end up looking, etc. So I do feel fine being long risk. I'm long at the S&P from 2720, so I'm already like 55 handles in the money, and why not? I think we should test the 2800 area, if not, end up pushing to new highs. Now, having to do with other indices, Nasdaq, I know that it pulled back after incrementally posting a new high, and I know that a lot of people will be talking about a potential false break to the upside. Personally, I remain quite bullish. We might be, as we've said some time ago, in an ascending wedge, in which case, we can move a little bit lower, move to new all-time highs again, etc. Nikkei found support perfectly at the 22,000 area, as we had said. Going back to the 23,000 area, in my opinion, if it does break above 23, I think it's headed to the recent high above 24,000. So 23,000 is going to be a major area once again. Unless it gets rejected, it looks quite nicely. DAX, after finding resistance at 12,900, found support again at 12,600. So in essence, it's oscillating between strong support and resistance areas. I wouldn't rule out a break lower, since I'm expecting that Euro USD might strengthen from here. So I wouldn't rule out a break a little bit lower. But in general, I would say that I would be looking higher, either from a little bit lower or even directly if we do close again above 12,900. And finally, the FTSE. FTSE seems to be consolidating after a first leg lower, following that parabolic move to the upside. I wouldn't be surprised if I saw one more leg to the downside, but I would eventually be looking for the recent highs to be taken out. So I'm bullish. I wouldn't be buying here. I would consider it an opportunity to buy, after seeing one more leg to the downside, though. So I do think that we covered, the vast majority of the risk assets like that. White copper does not move like gold, silver, platinum. For various reasons, actually. They're different metals. They're used for different reasons. They even have somewhat different correlations. I mean, the only thing that they have in common is that we usually denominate them in dollars. So obviously they are all affected by broader dollar moves. But other than that, they have quite different characteristics.
How about this, Steve? Copper is about construction. Gold is about destruction.
Yeah, depends on the kind of destruction, though, because we had even seen, Dale, that during the some of the periods of financial stress escalations, gold was actually not picking up. So that's also not very standard or very direct. But yeah, when there is extreme risk, yes, Dale?
Sorry to interrupt. In 2008, when the crisis hit, gold and silver got hit a lot because it's one asset that's liquid. You can sell that to finance other things, right? So
okay, so you guys were trying to come up with a reason that would make silver go down. You just mentioned it.
I think short term, that's one of the reasons that it can make it go down. Yes.
Yeah.
By the way, Dale, I really liked what you said about construction and destruction.
Yeah, because debt destruction is what I was talking about, or mainly currency destruction. I mean, it's already worked for people living in Turkey and other countries whose currencies have gotten obliterated in the last year, right?
Yeah.
I mean, instead of them holding the paper, they're in a lot better shape if they bought physical in their currency.
Yeah, I know people in my family, aunts and uncles and grandfathers and all that, decades ago when the Greek drachma was collapsing, all they had, which held value, was gold coins.
Yeah.
So, that can work. You're absolutely right.
Yeah.
Speaking of the use of the Turkish lira, which you did, Dale, last time we saw the Turkish lira, it was up there, and I drew that, perhaps this is a bull flag. So we might need one more leg to the downside. I think this is what's playing out here. But I would caution people very much. I do think that this move lower for the Turkish lira is most likely a corrective one. So I would caution, not to try to be overly bearish this currency pair, because I do think that it might be resuming to all-time highs, soon enough. Now, having to do, we have a question about Euro Aussie, and in general, let's have a look at the Euro and the pound crosses. This is what I had drawn some time ago, that perhaps we would see a rebound towards this 156 area, because 156, in my opinion, is now resistance before moving lower. So as long as we remain below that in the Euro Aussie, I would be looking for it to extend to the downside. So I wouldn't be jumping the gun trying to be long yet. And let's have a look at the Euro Kiwi. Euro Kiwi broke below this ascending channel, but it didn't produce any follow through. It actually found support in this horizontal area of support. It did rebound somewhat, but in all honesty, it feels very heavy to me. I would be looking for more downside, so that hasn't really changed. I wouldn't find it very surprising if it actually oscillated, around here, or even rebound a little bit further than it has. But ultimately, I would be looking for at least one more leg to the downside. Same deal with the pound Aussie and the pound Kiwi. As you see, we had some kind of a recovery here in the pound Aussie. I do believe that as long as it stays below 179.50, it's bound to produce one more leg to the downside, and probably it's not going to even make it there. I'm just saying, pound Kiwi looks even weaker than that. This 189.50 area, quite important. You can see going back, quite important as a horizontal support. I do think that if we do break lower, which I consider it a high probability, we're going to be headed down to 186, and 186 is going to end up being quite a critical zone. So, for the time being, I remain bearish all of them, looking lower. I don't yet see a good reason to attempt buying it. I consider it quite dangerous. It will go to 8 if Erdogan wins, in quotes, steals the election, USDTRY, says Kerem. Now, I don't know about 8, because as you understand, there is a big distance to that, but I do agree with you. I don't really see fundamentally anything at the moment. First of all, I don't believe that there is any real chance that Erdogan is going to lose the elections. So yes, I do believe that with Erdogan staying in power, and with all the rest of the factors that are affecting the general area, I do believe that the depreciation of the Turkish lira is going to be ongoing, Kerem. I still don't see anything that can actually stop it. So at some point in the future, I believe that the Turkish lira is going to be a magnificent long, especially considering the interest rates that the Turkish Central Bank has established, and it's going to have to keep increasing them. But I don't see that time being now. So we just need to remain patient. Now, speaking about the USD Turkish lira, let's have a look at a few more exotics, because I do think that they're interesting. One of them is the USD ruble. You can see it here. I do think that this is very likely a triangle, and it looks very nice if it actually breaks the upside. I might actually consider buying it once again. This looks very nice. I'm looking for it to extend. This is also the USD against the Singaporean dollar. Looks like it's also within a triangle, not coincidentally. This is the USD Chinese yuan. It actually broke above this descending channel. It extended. It actually reached the 50% fib of the last leg lower. I do believe that it still looks good to me for another move towards the 646, which was my initial target. Once we were breaking the channel, I said that I think 646 is, I drew this, I said 646 is actually a good place to be looking for. And let me not forget crude. I think that this consolidation that we're seeing in crude, actually crude came back, retested this 66.50, roughly, let's call it area, 66.30 actually, area as a resistance. I do think that this is one more bearish consolidation. So I do believe that crude is about to extend lower once again. USD MXN, USD CAD, Blake already covered them. Let's have another look at the USD ZAR as well. USD ZAR actually now testing a very interesting resistance area. We're also seeing RSI confirming, because as you see, RSI was actually capped by this descending trend line. It is also breaking higher, confirming this. I do think that USDR might extend to the 1340 area, the 61.8. But as I have said, I wouldn't be looking for this to be like a huge reversal to the upside. At least I'm not convinced yet at all. So I would be looking for this to fail. And when it does, only if I see the move lower being a corrective one, I will then consider that this whole move lower, because as you see, this was a very strong uptrend from 2011 to the highs at the beginning of 2016. Since 2016, we've been moving lower. Only if I see the move, one move lower, like being corrective, I will start considering that perhaps the whole move from the highs was a correction to the larger trend that's now finished. Until that happens, I'm going to be looking for it to fail, and I'm going to look for it to extend to the downside. Okay. Once you promised to add copper and Nasdaq in your analysis, what about that? Yeah, that's quite a high probability. Actually, I don't want to go into details, but currently we're looking into some possibility to expand our analysis and, you know, some other business-to-business stuff that are happening at the moment with ForexAnalytix. So I do believe that the chances of extending the instruments we cover are quite high for the medium term. Now, I don't have something concrete yet. Obviously, you're going to know when that time happens, but I don't believe that we're going to be staying with 30 instruments sooner or later. I think that there are going to be more. And when that happens, obviously, Nasdaq and copper are some of the best candidates to be added, because, you know, both of them are instruments that we all consider, interesting to monitor. Dale, do we have an interview today? Dale, let's have a look at the DXY, by the way, until Dale is here.
He did say we have an interview, but he might be out looking for preparing for
it.
Okay.
Okay, here's the DXY, by the way. Last time we were drawing on this chart was here, that we were expecting one more leg lower to extend. So far, this has been happening. I don't think it's over. So I do think that the DXY should at least come down to retest the 90 to 70 area before moving to the upside. So I'm still looking lower. That's why I still feel quite nice, quite confident being along the Euro USD. Now, let me see, because I wanted to talk about two more things, and one of them was definitely Bitcoin. I know that I don't often do that, but I want to show you here that this area, roughly at 6,500, if I zoom out, you can see how important this area is. So if we do actually close below 6,500 in Bitcoin, I do think that Bitcoin is going to be in a lot more trouble than it has been. And I do think that, you know, that's going to break the back of many of the remaining bulls, especially people that were committed, you know, at higher prices. This was looking like a solid area of support, and now this solid area of support seems to be about to fail. So keep that in mind. A very key area. If we have a look at Ethereum doesn't look that bearish. I think, you know, an equivalent level for Ethereum is at 400, but definitely Bitcoin, which remains, you know, the benchmark, is in serious trouble at the moment. So,
and over a hack, Steve, wasn't it over a hack in South Korea?
Yes, like 40 million worth of Bitcoin was hacked, something like that, I think, Dale.
Yeah. So, I mean, the fundamentals of this market,
but
gosh, I mean, you know, how do you trade something and protect,
Dale, something, Dale, if you remember, we had incidents of hacks even when Bitcoin was going up in an exponential manner. And what did the market do whenever that happened?
They bought the dip.
Yeah, exactly. So it's what we've been saying multiple times, which is, you know, in a bear market, you're going to see bad news being important, bad news creating big moves to the downside. On the other hand, the same with a bull trend. I mean, it's going to be giving more weight to bullish news, and it's going to be disregarding the bearish news. In this case, Bitcoin seems for quite some time now to be shrugging off the bullish news and just creating little bounces due to them, and anything bearish that comes, it immediately brings another strong leg to the downside. So for the time being, technically speaking, I don't see anything bullish, especially with Bitcoin, looking at the chart.
And you brought up the relative strength of Ethereum, Steve, for anytime I interviewed someone on crypto, and we have a good crypto guy coming in on Thursday, but Ethereum's been getting a larger and larger share of the daily trading volume. So there's been more money flow into Ethereum. It's rising compared to Bitcoin.
Yeah.
Yeah. So, maybe people even trade spreads. They could be long Ethereum, short Bitcoin. Who knows?
Sure. Why not?
Yeah.
By the way, Dale, who do we have today for an interview?
Goldfinger. Do you remember the movie?
Oh, absolutely. Yeah.
Okay. Well, if he doesn't do a good job, I'm going to be odd job, and I'm going to throw my hat at Goldfinger today. All right.
Okay.
And he's here. He's in the house.
Okay. So enjoy the interview, and we'll be here
put out
tomorrow.
the theme music. I love that song. Goldfinger is the one with the golden touch. He loves only gold. And for Stelios, he loves only silver. All right. You ready, Robert? Okay, guys. Good analysis. Thank you, Steve.
Everyone, stick around.
Best team on the net. Best
this is going to definitely be
best free webinar or paid in the galaxy, in my extremely accurate and humble opinion. All right. Enough of my silliness. Looking forward to talking to you, Goldfinger. I'm passing you, let's see, a Krugerrand. I'm passing you the Krugerrand or a gold bar, and looking forward to meeting you and seeing your screens and setups and talking about precious metals and black gold crude with you.
Okay, can you hear me, Dale?
Yeah, I got you, Goldfinger. How are you?
Okay, good. Can you see my screen, or can you just hear me?
Not, let's see. Not yet.
Okay, so let's just leave it that way. I'll share my screen later on.
Share your screen. Share your screen now.
Share my screen? Okay.
Yeah, this isn't your show.
I'm trying to figure out.
All right, so there'll be a Dropbox there, and it'll say share screen, and you'll be able to share the screen you want to show.
Okay.
Having issues with that?
Can you see it now?
Got it. Yeah, we have Bitcoin here.
Yeah. Well.
Oh, you had that fake out head and shoulders on your chart too.
Yeah.
But you know what? I wanted to ask you before we got started, since you're the first CEO technician I've ever met in my career, it's been a long career. I'm wondering if people at your company have to get your permission to draw channel lines because you're the CEO technician.
Well, okay, so I don't really have a company. CEO.ca is a website, and it's based on the mining sector. It's based in Canada,
right?
And so that was my moniker there for a few years, and then I changed it to the Goldfinger, which you like, and I think a lot of people like that. I think it's a fun name, and I do a lot of work on gold and the gold mining sector, so it fits.
So how did you get to become a Goldfinger? What was the beginning of your journey into the trading analysis industry of these kind of high spec markets? How did you Who introduced you to it?
Oh yeah, well, I mean, it's quite a winding road, but I mean, definitely my father had a huge hand in it. My father was involved in the stock market basically my whole life and way prior to me being born. In fact, he invented the first stock, quote, box, for lack of a better term. Back in the 60s, stockbrokers could put this box on their desk and they could put in the stock symbol and get the quote from the NYSE, even though it was 20.
Was it Quotron, or Quotron bought them out?
It was bought out by Quotron, I believe.
Okay, all right. Yeah, I remember those.
Yeah.
All you have to do is watch the movie Wall Street, everybody, and you'll see what people were using back then.
Yeah, no, but so his thing was actually, it was on brokers' desks in 1965. So it was way
earlier,
prior to Wall Street.
Yeah.
And they sold out to Reuters, actually. Sorry, it was Reuters that bought them out in 1970.
Wow.
So my father's a big stock market guy. He was an investor his whole life. So I naturally had the bug from a young age. But when I went to college, I didn't really, I studied economics, wasn't really, when I was in college, it was during the dot-com boom. And it kind of soured everybody when it crashed in 2000 and 2001. So I wasn't really thinking I was going to get involved in markets as a big part of my life when I graduated. But a few years after I graduated from college, my friend was working for a brokerage firm. And he called me up and said, get your Series 7, come down here, and you'll make $1 million. And I said, oh, well, that sounds like a good offer. And he said, we're going to hire you. You just passed your Series 7 and you'll get hired. And I didn't know what I was doing. I didn't know it, much at all. I thought I knew stuff because of.
How many dials did you make a day? And how did you like cold calling?
It was a different kind of boiler room. It wasn't a cold calling room, but it was more of a churn volume room where we're going to trade as much as we can, and if we can just make a penny or two, the house will make a lot of money, and the brokers, the traders, the brokers, quote unquote,
converting clients' equity into commission dollars.
So no, I mean, wasn't so we didn't have clients. We had a bankroll, and the house just wanted to churn as much volume to get the rebates on the volume.
Wow. Okay.
So I didn't make anything. I traded there for like 6 months and didn't make anything, and was kind of lost as to what I was going to do because this wasn't making $1 million. It wasn't even close. But I did learn a bit about the industry. I learned about how certain things work, and I went off on my own. And I was fortunate enough to have some bankroll from my grandmother, and I started to trade on my own. And I learned.
Did you have mentors?
Yeah, I did. I had a few different mentors, and my father was always a mentor. In fact,
you're lucky.
The time I went off on my own was 2006, and he was very heavily involved in investing in the mining sector. So he really got very heavy into investing in the gold sector and even like copper and all, natural gas and oil. He really got heavily invested in 2003, which is actually perfect timing because that's when the bull market really started to get going. So by 2006, he was really in the thick of it and doing very, very well. So I was following along with him a lot and learning from him, his wins and his losses. And that's really how I cut my teeth, was basically from my father.
All right. Well, you're very fortunate. A lot of people have to depend on the internet and try and weed through and do their due diligence as to, what's good and what isn't. So you started here with a Bitcoin chart. Do you trade cryptos?
Yeah, I do. Yeah. So it's funny, when I saw the thing prior, the Forex gentlemen, I'm always amazed by the number of lines and indicators on Forex guys charts. It always blows me away. I can't even understand how they look at all that stuff. I'm a technical guy. I use charts first and foremost, but my charts are very simple. I mean, if you look at the stuff that I post, it's usually maybe a few lines, maybe a Fibonacci, here and there, and the rest of it is just looking at support levels and trends. I mean, it's
So let me ask you this, because I'm a big proponent of RSI. What message are you getting from the RSI on this washout in Bitcoin today?
Well, I mean, so the Bitcoin chart, and the reason why I pulled this
Well,
up
I'm asking about what message are you getting from RSI, which you look like you use RSI and MACD. What's it telling you about Bitcoin today?
Well, we're deeply oversold, but we're in a bear market, and it could bounce a little bit, but this thing is in trouble. I mean, it's made lower highs on the RSI since May, and it's made lower lows. It just made another lower low, and it's in bear territory. So even though it's technically oversold, the trend is pretty powerful to the downside here. So even if we get a bounce, I mean, sure, it could bounce back to 7,000, maybe even back to 7,200, but the trend is down. So we're probably going to make lower lows. And like the other guy was saying, I mean, the problem for a Bitcoin bull here is that if this thing gets under 6,000, it's making a lower low after a bear market, parabolic crash and a bear market rally. I mean, it's everything, and it's not following silver in 2011 to a T, but markets don't copy each other, but they do rhyme, and they're similar in their patterns. And so this is
so you see a correlation between silver and Bitcoin? Because a lot of people were talking about stock indexes, equities, and Bitcoin, but you see a correlation between silver and Bitcoin?
Yeah, I think it's very similar. Yeah, I mean, I was trading very heavily in 2011, and I traded silver futures even. That's how crazy I was. And I actually did very well because that market gave a lot of opportunities, both on the long side and on the short side. But if you recall, going back to, let's say, March, April, May of 2011, the mood around silver, the sentiment around silver was very similar to Bitcoin at the end of 2017, the last couple months of 2017. I mean, the bulls were shouting from the rooftops, banging their chests that, this is the next big thing. But back in 2011, silver was going to $100, was the bull case, and that the dollar was going to zero, was basically, worthless. And obviously we know now, obviously 7 years of hindsight, that 2011 in the dollar was actually a major low, major bottom in the dollar, and it was a major top in silver. And so similar with Bitcoin, the sentiment was extreme. It was, euphoric, and the price action was parabolic. So in the sense that the price action was parabolic in silver in April 2011, the sentiment was through the roof. Same thing in, at the end of last year in, Bitcoin, parabolic price action and through the roof sentiment.
Okay, let's get in my time machine and push the handle from the past to the present and looking into the future. What are some of your views going forward on gold, which you talk a lot about the miners, and I follow miners too. Miners have way underperformed gold for quite some time now. I was schooled that the miners lead the underlying commodity. What's your take on gold? And even with the recent bout of dollar weakness, gold hasn't done much. It's all been about being long silver and short gold. So going forward, what's your view on gold and silver?
Well, I mean, I think that the metals in general have a long-term pull to the, upside. They have a tailwind, monetary inflation, expanding population, et cetera, et cetera. I think that they go higher over time. I'm not one of these guys who thinks that, gold is going to 10,000 next month or something, but I think gold is actually a very interesting market right now. And what you're saying about the gold miners is absolutely true. Gold mining sector has sucked for a very long time. I mean, it had a little bit of a rally a couple of years ago for about
very nice one.
Yeah, it had a nice move.
A lot of things quadrupled, like Mux from 70 cents to 450 or something like that. I mean, they all doubled at least during that
run. If you didn't catch at least a double on your gold or silver stock in 2016, you were in the wrong stock.
Yeah. So how about now? We've retraced, but haven't negated all these gains. Do you like the miners here, or do you think they'll still get cheaper?
I'm long the miners here. I'm not like heavily long, but I am long. I do like them here. I think the sentiment on the sector is pretty negative. I mean, it's not extreme to the downside, but I think a lot of people don't own this sector. A lot of people don't think this sector can maintain a move to the upside for very long. I think.
Do you do it through individual companies, or do you use ETFs like Dust and Nugget and?
Yeah,
how do you do it?
I use the exchange traded funds a lot, but I also have a portfolio of smaller mining stocks. So that's another thing that I do. I'm not just a short-term trader, though I do a bit of that on a regular basis. I have a long-term, investments as well in smaller mining stocks. So this is like, one of my specialties.
Like pink sheets?
Yeah, I mean, so I buy them in Canada, where they actually have a real exchange, listing.
Okay.
Your exchange, and you can do that through IB.
That Vancouver exchange?
Well, it's called the Venture Exchange. It actually was in Vancouver, but they bought it all out. It's one company now, and it's called the Venture Exchange. But yeah, many years ago there was a building.
You mean the Misadventure Exchange?
Yeah.
Why are you laughing? Why are you laughing?
The Venture Exchange has a long and storied history of amazing, swindles and frauds and sorts of stuff. but
that's what I'll call it.
It's funny. At the same time, I'm always amazed at how great it is for capital formation, and the fact that if somebody has a really good idea or what they think is a good idea, they can, list the company in Canada and probably raise a few $1 million. And then it's whether or not they can find that gold or copper or whatever it is that they're trying to find in the ground. And, the mining sector is treacherous because the odds of making a, real finding an ore body that is economic is very low. The odds are really against you. But
so I've been taught to bet on the jockey, which is the management or the CEO of the company, because they have a track record. Huh?
That's a great way to go. I mean, there are guys who win on a regular basis, and there are guys that lose on a regular basis.
Yeah, like McEwen's pretty good, right?
He's a solid name in the industry, although he's had some challenges recently as well. I mean,
yeah, who hasn't? I mean, you even talk about in the trading industry, guys like John Paulson having 40% drawdowns, but they did become billionaires in the market.
yeah,
So
this is the thing. These guys know how to structure deals such that if they're putting in a relatively small amount of their own capital, and then they're getting a lot of the potential upside of the deal.
Well, basically, they're creating their own Federal Reserve because their paper is their currency, and they use it for everything, don't they? They float it for, IR. They float it for equipment. But so, really, they have their own printing press, and
Yes,
there's a lot of dilution, right?
That's correct. And the guys that you want to bet on are guys who don't do that to an excessive amount, because if you're getting diluted constantly, the odds are really, really against you as a shareholder. So you want
it's fun to get reverse splits, isn't it?
Yeah, well, yeah, there are those as well.
All right, so I'd like to switch gears since oil's another one of your bailiwicks. So we had the really outstanding bull run to almost $73, and then we had that 7-8% pullback. Crude's still trying to gather its footing. You have a view on oil from here, and do you think that part of the catalyst? I've interviewed some people that are, that trade a lot of oil issues, that think that there could be some type of problem and possibly conflict with Iran later in the year.
It's interesting. Last week I was looking at oil. And by the way, so when we had that move up above 70, I actually kind of top ticked it on the day that it hit 72.90. I went negative on oil and basically said, I think that this is going to be a peak for a while. This could be the peak for the rest of the year. I just think that price level above $72 a barrel, and then you have Trump trying to talk it down and the Saudis trying to talk it down. There's a lot of powers that do not want oil above $70 a barrel. So
what would be a good level to start to reaccumulate around your moving average? $60?
I think we could get back to 60. Yeah, I think this could come back to $60, and then you might want to be a buyer of the complex. But looking at a bunch of the charts of the oil services and even like Chevron and stuff, I think that they're in a little bit of trouble here. I think there could be more downside in this sector. It doesn't attract me to want to get long this sector. And then last week I was reading a lot on this space, and there's people who have really good arguments to be positive on oil that makes sense, and there's a lot of bearish arguments that make a lot of sense as well. I don't really have a strong opinion on this either way. And it's interesting how the narrative in the market always follows the price action. So when oil went above 70, all of a sudden we had this narrative, this bullish narrative that was coming out. Everybody was explaining why there's too little oil out there, that the shale guys aren't able to pump out as much as we thought. And all of a sudden you got this, narrative on why oil's going to 100, but it had already gone from 43 to over 70 in about a year. So it already had this big move. I mean, that's a massive move in oil. And I always get suspect after a very big move when the narrative and the sentiment then starts to change and be, oh no, it's got to go even higher now. And I think that you see that in a lot of markets where the sentiment is kind of late to the party.
Yeah. So, do you have a business model, or do you train people, or people subscribe to your newsletter? Do you just trade your own account to make a living? What's your business model?
Actually, it's very simple. So I trade, I invest. So most of my income is from my own, accounts. I also manage a portfolio for a high net worth investor, which I get compensated for as well. And I also do have a subscription model. I have a very small .ca with less than 70 people in it, and I charge an annual fee, and we take trades, share charts, talk about the market in there, and I do generate some income from that as well.
And what's your monthly charge to be in your room?
It's $50 a month or $500 a year.
Okay, it's reasonable. I want to thank you for your time and dropping in and getting to know you, Goldfinger. I appreciate your time today.
Appreciate it.
All right, and I wish you, good hunting and a lot of success continue for you and all the people that your words reach, either written or orally. So you're now my trading warrior brother, Goldfinger.
Thank you, my friend. I appreciate it.
All right, well,
Yeah,
good hunting this week. A lot of landmines, red events, and everything. So appreciate you coming here and sharing your views and your journey with us today. Thank you, Robert.
Thank you, my friend.
All right, that's it for Monday, guys. I'll see everyone for Turnaround Tuesday. You could follow Goldfinger at CEO Technician. And most of all, everyone, don't just count your pips, count your blessings. See you for Turnaround Tuesday. I don't expect to be calling anything except maybe a day trade because of all the red events this week. So enjoy the rest of your day. Thank you for your attention. And don't forget to call Trent if you're unhappy at all or you want to have more than one account. There's not a law of having more than one FX account. Maybe the best way for you to know what you have is to compare it to another. So give Trent at Forest Park FX a call and get to know him, because you never know when you might want to make a change. And that's a wrap. Adios. Trade safely and see everyone for Turnaround Tuesday. Thanks again, Robert.